Hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Yatin, I know. We've seen a deep cut on the Lal Street today as well. We saw a deep cut on Friday as well. But I'm in a good mood, of course, because India, won the match against Pakistan, and of course, not just that. We saw Rout also coming back in form with a bang, 14,000 runs, and of course a ton. That was much awaited, and he fired when it was much needed. So yes,
but whatever said and done, obviously India-Pakistan matches are quite interesting. But clearly that didn't cheer the market. Dow futures are higher, and still we closed almost near the day's low, breaking that important 22,700 mark, which was a key support zone. I think a lot of market participants who are cricket geeks celebrated over the weekend. But clearly it's a Monday.
Only to come back to a manic Monday.
Yeah, it's a Monday, blue, which clearly doesn't fade.
Yeah.
In fact, I was reading Money Control's article, which says that we are, one of the worst markets globally, and this is one of the deepest correction we have seen in 28 years.
True that.
Yeah. So
we are poised for, I think, the longest monthly losing streak
yes.
in the last 28 years. Only twice that the Nifty has clocked a 5-month losing streak, and this could be the second, because we are down somewhere around 4% on a YTD month to date basis, so to say. But Yatin, just looking at today's action, 22,600, that was violated. We ended just at that 22,550 mark. 22,580 was a crucial support zone, as my morning technical guest had pointed out. We've broken below that. 240-point cut on the Nifty. The Midcap index continues to see sell-off, another 1% cut coming in there. Bank Nifty, Yatin, has ended lower by about another 300 points. And look at the IT pack, almost a 3% cut, right?
Correct.
We have cautious outlook coming in from Capgemini last week. Even another company has cut its guidance for FY25. Because of that, these IT stocks are facing the jitters, along with, of course, the tariff jitters that has been weighing in on the market as well.
And I think today there was a NASSCOM conference in which their official statement says that in FY26, NASSCOM expects a 5-6% kind of a growth in the Indian IT industry on a year-on-year basis. So that is nothing to cheer. The IT index didn't recover. Despite the fact that we'll be at least growing, and not contracting like other companies. In fact, Capgemini gave a guidance of -2% to +2%. And the IT index clearly showing that the kind of global correlation which is there, which is hinting, that there could be a slowdown, there could be a, Trump tariff effect, which would enrage higher inflation globally.
That's true, Yatin. So yes, that was, of course, the key reason why US markets also sold off on Friday. But as you mentioned, US futures are trading in the green, but no respite for our markets. As we mentioned on the headline indices, it was an over 1% cut, mid-cap index as well. The advanced decline ratio, when we started out, it was 1:6, but I think now it was 1:3. That was the NSE advanced decline ratio. Talking about some of the other sectors that managed to buck the trend, you had autos staged a very good recovery from the day's low, Yatin. In fact, ended the day in the green. FMCG and pharma also managed to end with slim gains. In terms of individual movers, M&M, that was, I think, saw the biggest intraday drop on Friday in the last 7 months. Today, staged a good recovery. In fact, it was the top Nifty gainer today, Yatin. Right. We'll be talking about this stock in details. Dr. Reddy's, Eicher Motors, Hero Moto, Kotak Bank, Nestle. These were some of the other stocks on the gaining side. On the flip side, obviously, IT, saw deep cuts. So 4 out of the top 5 losers on the Nifty are from the IT pack. Wipro, HCL, TCS, Infosys, all of them deep in the red. ONGC, Airtel and Tech Mahindra were the other ones that suffered. But Yatin, broader end of the markets, what was the scene there?
So, broader end of the markets were quite mixed. In fact, if you look at the few gainers today on the Nifty 500, we had Happiest Minds, Glaxo, Varun Beverages, Natco Pharma. In fact, if you look at Happiest Minds, VBL, which is Varun Beverages, Natco Pharma, these are all beaten down names, probably looking to bounce on an overall basis. So, that is probably a dead cat bounce kind of thing which is happening. Jyoti CNC stock was 12,1300, and post results you have seen the stock collapse. 6% down today, rate is 840, so deep correction coming in there. Nalco, last week gained smartly as the metals rallied, but given the fact that alumina prices globally have come down, that stock fell 6%. Naukri, down 5%. However, stocks, which did not do well And our hitting fresh 52-week lows today include Welspun Living, AIA Engineering, Ratnamani Metals, Serra Ceramics, Mahindra CI, which is now CI India. So, the advanced decline ratio clearly showing, which was almost 1:3, that how deep corrections are happening in the mid-cap market.
That's true, and let's take note of some of these global brokerages and what they think of Indian markets after the recent correction. Starting off with Jefferies, they've pointed out that Indian markets have seen a fair bit of correction. Just to get you a recap, 14% down for the Nifty from all-time highs. Mid and small cap indices have corrected in excess of 20% from their respective highs. So Jefferies believes that equities are now poised for a near-term bounce. In fact, I was talking to Sunil Subramaniam, market expert, in the morning. He has also said that although mid and small caps may see more pain, but we are close to the bottom now. In the next few weeks, he is expecting a bounce in the market. So that's some bit of a respite or good news, in the middle of all these global happenings that are taking a toll on the market. But in terms of reasons as to why a bounce is expected, Jefferies has listed out a few. They've said that the Nifty valuations are now close to average. They've also said that some of the recent cues like the RBI rate cut, government spending, of course, the tax cuts announced in the budget, all these have kind of gotten ignored by the market because we did see a reaction, but all that was overshadowed by the noise around tariff or in the middle of the tariff turmoil. So these are some of the cues that may come to the fore, and the market may stage a comeback on the back of this. Economic activity levels are also picking up, if you look at some of the data that has come out recently, and improving data points and reasonable valuations, a mixture of these factors could lead to a bounce in the market going forward. Now, they've also laid out some stock picking strategies. They've said that pick stocks that are trading at fair valuations which are below their long-term average, and choose stocks with growth visibility somewhere around 14% EPS growth. Pick stocks that have seen minimal downgrades in the last 2 quarters of somewhere around 5% or less. So these are the stock picking strategies that Jefferies has laid out. Let's take a look at some of the top picks then that Jefferies has in the current market condition. Voltas, Apollo Hospitals, Adani Ports, Shriram Finance, Home First, Aptus Home, within the housing plays, Crompton, Sirma, SGS and HDFC AMC. These are some of the top picks from Jefferies. Let's also see what CLSA has to say. Now, CLSA has said, contrary to what the market is saying, CLSA has said that earnings, the third quarter earnings were actually better than expected, although there were EPS cuts and that remains a cause of concern. But around 30% of the companies that are under CLSA coverage have managed to beat expectations, and 46 of them have underperformed. 46% of the stocks that are under their coverage have underperformed. Now, earnings have been upgraded for 18% of the coverage universe for FY26, and they've been downgraded for 63% of the coverage universe for FY26. Now, top upgrades for FY26 pointed out by CLSA are the likes of DLF, Muthoot Finance and ONGC, and on the contrary, the top downgrades are the likes of Zomato, PVR Inox and Bandhan Bank. Now, some of the stocks have also been upgraded from underperform to hold by CLSA. Those are again the likes of Voltas, Tata Steel, IOC, BPCL, Oil India, and they've also upgraded some stocks from hold to outperform, and those are the likes of Escorts, Dalmia Bharat, Keynes Tech, Chola Investment, and some of the other names like Muthoot Finance, in fact, IT names are also there on the list, TCS, Wipro, apart from ACC from the cement pack. Bajaj Auto, they've upgraded from underperform to outperform, but GSPL and Dr. Reddy's are 2 stocks that have been downgraded. So, all in all, contrary view coming in from CLSA saying that earnings actually for Q3 have been much better than what they were expecting, and Jefferies on the other hand is hoping or is confident that a near-term bounce may be likely when it comes to the market. So yes, some bit of respite, both in terms of earnings and market moves expected, if you go by what global brokerages have to say.
Absolutely, and brokerages have now come out with the strategy report, given the fact that we have concluded the Q3 earnings and now looking at Q4 completion as well as, the outlook for FY26. Brokerages do remain hopeful that from here on things at least look good from the benchmark indices point, which means that the large caps, Nandita, would stabilize much earlier than the correction that we have seen for the mid caps, which might continue for some time, especially when you have March end, which is on your near-term radar. But moving from strategy to stocks, and Citi has come out with a note on Federal Bank. Remember, Federal Bank had hosted a big analyst meet. Their analyst day was focused on how really do they make Federal Bank one of the top 5 private banks in the country moving forward. In fact, if you look at Citi, they have a buy call on Federal Bank with a target of 242, which means that from the current market price, they are expecting a 30-40% kind of a upside. Now they have unveiled a breakthrough phase strategy wherein execution will remain a key. Moving ahead, state-specific expansion beyond Kerala will be looked at. Given the fact that their gold loan business and branches are concentrated in the state of Kerala, probably they'll move out aggressively from that state and look at west and north markets. They are optimizing yields and enhancing the fees collections, which would increase the profitability of the bank. Near-term headwinds might outweigh the medium-term aspirations, but at valuations of nearly 1.1 time FY27 price to book means that the stock is attractively valued according to Citi. In fact, gold loan business as well as the overall return on asset is something that could be watched by analysts in the near term when it comes to the bank's performance. But probably, the new management from Kotak, which is now at helm at Federal Bank, required one analyst meet and vision for the next 3 to 4 years, which the management has spelled out, and probably the reason why in a weak market the stock clearly outperformed not only the bank but also the benchmark indices, almost 1.5% higher for Federal Bank after that analyst meet outcome.
All right, of course, strong outlook, and that is boding well for the stock of Federal Bank as well, which by the way has managed to outperform the bank Nifty, yes, which ended lower by somewhere around 300 points or thereabouts. But another stock that has clawed back quite smartly is M&M. In fact, that was the top Nifty gainer today, Yatin, on a day when the Nifty fell somewhere around 250 points. Friday, remember, we saw the biggest single day drop on M&M, on shares of M&M, which dropped somewhere around 7% or thereabouts. But today, of course, a good day, 2% up for the stock. Jefferies, in fact, has maintained its buy call on the stock. Target price is at 4,075, which is a 53% upside from Friday's close price. So, of course, they do feel that valuations are looking attractive after a 14% correction over the last 10 days. Now, they have pointed out, Jefferies has pointed out that the correction or decline that we've seen in share prices is actually a buying opportunity on M&M. Remember, this stock was among the best performers of 2024 when it comes to the Nifty 50 stocks. Now, there are concerns, lingering concerns over Tesla's potential entry into India, but Jefferies says that the impact on the Indian OEMs will be fairly limited given the gap in portfolio prices. CLSA has said that the entry will not impact existing players like Maruti, Tata Motors, Hyundai as well. What they have said is that Tesla's cheapest car model retails at over 30 lakhs in US. Now, this is significantly higher than the average selling price of cars in India, which stands at somewhere around 12 lakh rupees or thereabouts. And it's highly unlikely that, Tesla will launch a vehicle which is somewhere around 20-21 lakhs, right? It will be much more than that. So, that's something that would actually work in favor of the Indian OEMs. Now, EV policy, the new EV policy could offer lower duty on limited volumes for high-priced vehicles. That's the expectation. Earlier, there were concerns that, because the import duty will be lowered significantly, that could eat into market share of the existing Indian companies. But now, Jefferies and other brokerages have pointed out that it will only be on limited volumes. Even Nomura has pointed out that, EV policy guidelines will actually work in favor of Indian OEMs as well, as it will lead to faster adoption of electric vehicles. Of course, it will help the Tesla, in fact, make its Indian market debut, but won't negatively impact, automakers, as Tesla actually competes with luxury original equipment manufacturers. Aside of that, what could be working in favor of M&M is also the fact that its new launches, XEV 9E and BE6 have seen or have got orders for 30,000, last year. And this is encouraging because it forms 30% of India's total, EV sales for the calendar year 2024. Valuations, of course, as I mentioned, they believe is attractive. Core FY26 PE of 20x supports 18% EPS CAGR over FY24 to FY27. So yes, all in all, we have seen a sharp correction in prices of share prices of M&M, but Jefferies believes that the prices could rise by 50% going forward, and they believe that the recent correction is actually a buying opportunity when it comes to M&M, available at cheaper price now that it has seen a 14% correction.
I think, Tesla, the entry car, starts at 30 lakh rupees.
Yeah.
If you convert the dollar rates in the US, it goes as high as 80 lakh rupees.
Yeah.
Now, if you look at Indian OEMs, they are offering products, including M&M and Tata Motors, starting at almost 17.5 lakh rupees. In fact, the new Creta, which has been launched by Hyundai, it is priced at 18-19 lakhs. The entry level vehicle, which is ex showroom Delhi rate. And when Tesla starts at 30 lakhs, even if you account for a free import duty, if you account for lesser number of features, then everything is at par. So there is nothing for the Indian OEMs to worry at this point in time. Remember, a few years back, we had the Harley Davidson entry venture with Hero Moto, and how the stock of Eicher Motors fell. And today, Eicher Motors, a few months back was at all-time highs. Sometimes the market overreacts in the shorter terms, and probably try to adjust to ground reality. We haven't seen Harley Davidson do much in India, given the fact that there was so much noise then. Today, as we look back, we think that Eicher Motors at that time was probably like a buy, and today the same scenario is probably playing out for M&M. Time will tell how aggressively Tesla prices its products in India, because India EV penetration is only 2.5-3%. It's a large market. Where countries like China, the EV penetration is more than 30%. And if you count for two-wheelers, it would be as big as 50%. But whatever said and done, M&M, as Nandita was mentioning, is on the CLSA's radar, with the correction turning into a probable buy.
Yes, I think it was Jeffries, Yatin, for now. Yes,
CLSA also came out with a report.
CLSA also recently, So yes, as you mentioned, of course, you can't expect Tesla to price vehicles at 20-21 lakhs, right? So it's 30 lakh in the US. So let's see how things pan out. And of course, when you talk about Eicher and Harley Davidson, it remains a cult bike, right? Even Hero Harley, so to say, Hero Triumph, I beg your pardon, couldn't really do much.
Triumph is Bajaj.
Bajaj. Yes, Hero Harley and Bajaj Triumph. They could not really, give Eicher a run for its money, because the stock was at fresh highs recently. But I think with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. Of course, it wasn't really a good day for the market. Let's hope that the correction that these brokerages and market experts are talking about, the recovery after the correction, comes by pretty soon, and hopefully we are somewhere close to the bottom now that we are below that 22,600 mark. But with that, completely timed out. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and have a great evening.